Thank you so much for joining us today. We are really thrilled to have a stellar cast of panelists today to discuss CBDCs. My name is Mercina Tillemann. I'm the Chief Operating Officer of the Global Blockchain Business Council. And today, the total cryptocurrency cap exceeds $2 trillion. More than 80 countries have engaged in CBDC research, development, or testing. Central banks and supranationals are also examining the implications of this new tool. And as CBDCs and blockchain technology more generally continue to evolve, calls for clarity regarding regulatory and governance models have intensified. Decisions surrounding these foundational elements will shape the trajectory and potential of this technology for decades to come. And we are really privileged to be joined by a number of individuals who are actively engaged in building these types of solutions around the world. And so to start, I would love to hear first from Makoto, if you don't mind, about some of the work that you're doing with Soramitsu in Cambodia, because it really is a pretty tremendous pilot, and I'm keen to hear more.
你们好. So I'm Makoto Takemiya from Soramitsu. We're a blockchain fintech company that specializes in especially enterprise solutions and permission blockchains. And one of the clients that we have is the Central Bank of Cambodia. And we worked on a project for the last 4 years now called Bakong. And Bakong is a form of like a quasi CBDC where the central bank is actually issuing a digital currency on a distributed ledger. And then commercial banks are providing this service to customers in a two-tier architecture. And going from the initial concept and prototype to production took about 4 years working with the central bank. And I think we learned quite a lot about digital assets and regulation during the time. Actually, some of the hardest or the longest times that were spent in discussion were about the regulatory aspects of the system. So just creating a retail payment system that lets people send money from one person to another is actually not so hard. But actually doing it in the context of an existing regulatory framework and legislation is actually non-trivial. So we worked with the central bank quite a lot on creating rules that would make sense and also building up processes that would deal with criminal activity or things like that, while at the same time trying to preserve privacy, which is quite important in the retail system. So that was a very interesting project that we worked on over the last few years. And I think it's a great use case for blockchain and a showcase for the technology in general.
Thank you so much. And you brought up the issue of regulation, which I imagine most of the other folks on this call have had to deal with as well. And I'm wondering, Jason, if you can speak a little bit to your experience in that regard.
Yeah, absolutely. So I'm Jason Chapala. I'm the COO of the Stellar Development Foundation, which is the organization that shepherds the code base for the Stellar network, which is one of the large public blockchain networks. So I think the most important thing from our perspective is that there is public-private collaboration on this issue. It's not going to be something that can be solved entirely in the private sector, I mean, obviously, and it's also not going to be something that regulators and legislators can do completely on their own without bringing in different technology companies. I think with CBDCs in particular, even certainly 2 years ago, maybe even a year ago, from my perspective, I felt like certain countries or certain central banks really wanted to focus on the policy considerations first, and they would say we need to think about the policy, and then we'll pick the technology. Then we'll talk about what technology to use. Now, though, and I think most people are understanding this, the technology choices have deep implications for the policy. Like you were just talking about, things like privacy and anti-money laundering, all of these really key points. the technology you use is going to affect what you can and can't do around that. So now we're getting to this point where you sort of need to start having the conversation where you're talking about both policy and technology. And of course, the regulators and legislators are going to be the experts on the policy side, and technology companies can provide unique perspective around the technology, the different rails that are possible. But it's important that it's a group effort, and a lot of jurisdictions are doing this. I have, we at Stellar have experience with Ukraine, so we have been working with the Ukraine Ministry of Digital Transformation, who has been doing a lot of really forward thinking about virtual assets and things like national digital currencies, et cetera. So we've been really impressed by the way they are consulting with private sector, but also doing a lot of thinking, in the public sector. And Ukraine actually just, I think it was yesterday, it might have been 2 days ago, depending on when this airs, just passed a virtual assets bill. And so they're really making a lot of progress. But again, we think it's really important for this public-private collaboration.
Excellent. And Marta, I know so much of your work is right there at the intersection of the public and private spheres. Can you talk to us a little bit about your work at Filecoin and how that relates to your purview?
Sure. So the technology that we work on at the Falcon Foundation basically uses blockchain technology to create a decentralized storage network. So the basic idea is that if you have extra storage space on your computer hardware, you can rent it out to others and they will pay you to store their files, or rather pieces of their files, so that only the file owner can put the pieces back together. A computer program will basically regularly check that the files are still being stored on your hardware. And if so, they're automatically going to compensate you with Filecoin. So storage providers will basically rent out their extra storage space to earn Filecoin, and users will then spend Filecoin to store their files on other people's computers. So that may sound sort of like a niche use case, but we actually believe that this will serve as a foundational technology for the next generation of the internet. We think we can create a better version of the web if you sort of combine all of the storage capacity and computing power on all of our individual devices into a supercomputer-like network and store multiple copies of data across those devices. We think that this will create a more robust platform for humanity's, what we say is we want to preserve humanity's most important information. And so Filecoin really provides the incentive layer for people to contribute storage to that decentralized internet. And we've really found that those incentives work. So we launched last October, and since then, more than 3,000 Filecoin storage providers have contributed nearly 8 exabytes of storage capacity. And so just to put that in perspective, that could store all of the written works of mankind in all languages from the beginning of history to today 10 times over. So we really do think it is being used and can be used to preserve humanity's most important information.
Thank you so much. I find the work that you're doing really fascinating. And this question of adoption and how you get people to actually use these tools, I think is very critical. Laurent, can you speak a little bit to that, introducing new types of payment tools to different jurisdictions and how adoption looks from your perspective at Bitt?
Yeah, so first, I'm Laurent, Féral-Pierssens, CEO of Bitt. We're a CBDC infrastructure provider and the provider for the ECCB, so Eastern Central Caribbean Central Bank, with the legal tender Dcash digital currency that's now in circulation. And we've been awarded the Nigeria Central Bank contract very recently. I think, to your point, the expressed interest by central bank to achieve a certain number of use cases and certain number of new use cases in market are very telling of those questions. And if we take what we see in market, is really the deployment of faster, cheaper, and more reliable payment rails. We call them internet native payment rails. And the central banks were working with do this in order to support economic growth, improve the effectiveness of their monetary policy, on top of establishing a targeted social distribution, if we want. We've seen this in the last couple of years that have really triggered that massive influx of interest to bypass, or I would say improve, the current financial infrastructure. This being said, it's being done at a different pace by different regions. And it's also being done at a different pace depending if it's the central bank or the other stakeholders of the economy. And I like to speak often about the difference between CBDC and stablecoin and think about time horizon. Stablecoins are used, especially when we put them in perspective with CBDCs, in ways to harness the benefits of digital currency in a more traditional sense. While we want the longer time horizons happen with the central banks and deploying and harnessing those new technologies.
Thank you so much. And Jeff, I know you are charged with looking at some of these trends from a more macro perspective. I'm wondering if you can speak to what you've witnessed over the last several years with the rise of CBDCs and what is really driving all of this movement in the payment space.
Yeah, it's been a very, very exciting space to watch in the last few years. And remember, in kind of spring of 2019, I was putting together the curriculum for a course I was teaching on law, regulation, and policy of blockchain and crypto assets. And I was assessing, what to include with regard to stable coins. And I was debating whether to even mention central bank digital currency at all, because although there had been one sort of seminal paper that the CPMI had put out, it didn't really seem to be getting a lot of focus. Then in June of 2019, Facebook came out with the Libra announcement, and obviously that's they still have not been able to launch that. But that I think has really been a catalyst for action or reaction. I think that there was a recognition on a lot of people's parts that payments needed to be improved, and that's been part of the work of my colleagues on the panel here and many in the digital asset space, going back to 2008, 2009. So the will had been there, the technology was evolving, had been there, and people were testing lots of different technologies and business models and way to apply blockchain. But the notion, I think that was really, I think, a watershed moment here when first of all, on the CBDC side, central bankers and finance ministers and governments realized that a private actor with 2.6 billion users, if you look across all of those platforms, could potentially bring this to market. And this was no longer just a theoretical possibility. And so, I think since that time, it's galvanized a lot of the analysis of what are the different operating models of CBDC. I mean, people were working on it. I remember a conference in the summer of 2018 in New York where someone from the PBOC presented their two-tier model, which sounds somewhat similar to what Cambodia, my colleague, described. So, I think that there's sort of before 2019 and after 2019, and we've seen the acceleration of CBDC. I think the COVID crisis also, the challenges of getting funds to people who needed it has been another thing that's really exposed some of the shortcomings of existing payments, both within domestically and internationally. So, I think that the technology and the groundwork had been there, but the catalyst, over the last couple of years between the Libra and COVID, I think has really been an accelerant and, hopefully bringing us closer to this digital future.
And can I just add something?
Yeah, go ahead.
And this also, I think this mirrors what Jeff was just talking about and something Laurent mentioned. I think central bankers and others are realizing more and more, and this is kind of a mantra that at Stellar we like to talk about a lot we do at SDF. I think they're realizing blockchain can supplement the financial system. It doesn't have to replace it. There are certainly, Bitcoin maximalists out there who believe eventually fiat currency will go away and Bitcoin will replace that. And I think early on, a lot of people thought that, oh, that's what blockchain people are thinking about. But I totally agree that the Libra announcement was this huge precipitating event. And now people are talking about how can you supplement it? How can you make it better? Not get rid of the system, but add to it, make it better. And that's exactly what companies like Soramitsu are doing. That's what Bitt is working on. That's what all of us, Filecoin. These are all novel ways of making the system better, not trying to get rid of fiat currency.
Absolutely. Excellent points, Jason. And one thing that I love about this particular lineup of panelists is we have a really global perspective. We have projects coming out of Cambodia and Ukraine and the Caribbean. And I'm wondering if, starting with you, Makoto, you can speak a little bit to the characteristics that you look for when you are engaging a government, how you anticipate that one might be more open or willing than another.
Well, yeah, that's a very involved question, I think. But the simple answer really is that technology is a tool, and we're technology providers. So it makes sense to try to do some analysis and find out, given our limited time, where can we make the most impact? And I think obviously developing countries that don't have, efficient retail digital payment systems make a lot of sense to focus on. And that's kind of why we're mainly focusing on Southeast Asia right now. It doesn't mean that more advanced countries, like Japan or China or the US could not take advantage of the technology. Indeed, they can. I think that a long-term trend, and I'm talking about over decades, would be maybe an evolution of the model of kind of correspondent banking to use more of this kind of concept of the transfer value. That's kind of what Bitcoin hints at, right? When you're sending the transaction, you're not just sending a message to update some people's balance sheets, you're actually sending the value itself. And it's a third-party accounting method that's going on, so you can't fudge the numbers or anything. And for certain types of transactions, that makes a lot of sense. And it's a more efficient model than what you would have in the more traditional banking system. So I think that really at a long time horizon, you'll see that European, large Asian countries, large American countries would kind of move to that model. I think that in the shorter time horizon, that developing countries that don't really have good digital financial inclusion in the digital transaction space. I think that these will start to evolve just because we're all online now, right? So unlike 10, 20 years ago, right now, I think that there's a big need to have inclusive digital financial system, and that's kind of what we look for.
Excellent. And in finance, as in many other highly regulated fields, the cost of compliance tends to be extremely high. Laurent, can you speak a little bit to the cost of compliance when we're looking at traditional finance versus the cost of compliance in the solutions that you're building?
Thank you for the question. So without looking at the direct evaluated costs, what we can say is that the new relationships that are being created that are fully digital really build on top of each other's technology. We are seeing deep tools and deep services around compliance. And distinguishing pure crypto versus the digital financial infrastructure, what we're seeing is an acceleration of innovation, and this combination between the technology innovation and financial innovation together. So that compliance costs specifically are reducing or getting streamlined?
I would also add to that, on this question of compliance costs, Makoto, already brought up, correspondent banking. That's sort of a really clear example of where you could eliminate some of the cost instead of needing sometimes, multiple banks, your correspondent banks in the middle. You can have a much more direct, much simpler path for cross-border payments. So that reduces the cost. It's also it's sort of win-win because correspondent banking for small for small transaction amounts, it's a decreasing business. This is not a case of commercial banks are going to be really annoyed that blockchain could be disrupting that. Fewer and fewer banks want to be correspondent banks, and it is because it is so expensive for them. So this is an example where the technology can simplify that flow. Again, this is a case, it's not going to replace everything. Obviously, for very large value international transfers, banks probably will continue to make the most sense. But for these smaller value things like remittances, which is how blockchain helps with financial inclusion, it can make that flow much cheaper and much simpler.
Absolutely. And Marta, I'm wondering if you and the Filecoin Foundation butt up against questions of compliance in the work that you're engaged in.
Well, I think I would say more generally about sort of regulation and compliance. I think in the United States, there's definitely a myth that cryptocurrencies are somehow unregulated. It's something I hear repeated, repeatedly. And the reality is that the on-ramps and off-ramps where people are buying and selling and custodying cryptocurrency and digital assets are heavily regulated. And that they're chartered banks or they're trust companies or they're state licensed money transmitters, and they have minimum capital requirements, and they have to post bonds, and they have to open their doors to yearly examinations. They register with FinCEN and do know your customer checks. And so, I think there's a lot to be said about the amount of regulation in this space that I think is the public perception is that maybe it's not regulated. And I would also add that I think that it's really important to note, when it comes to regulation, that existing laws and regulations are sensibly applied to the cryptocurrency space. Regulation really is about activities, not about technology. So just as one example, if someone's committing fraud, it doesn't matter whether they're committing fraud using the phone or email or pen and paper or blockchain technology, right? That those activities are things that we can and do apply existing laws to. So that's sort of how I think about regulation in this space.
Excellent, thank you so much. And Jeff, I'm wondering if you can speak a little bit to the FATF travel rule and how that has impacted the digital asset space, whether you think it will be beneficial in the long term. Folks are often asking for additional clarification. And I'm just interested in your perspective on that particular rule.
Yeah, that's a great question. So the travel rule is kind of the industry term for people who may not be familiar with it, for a policy that was introduced by the FATF, which is the international kind of coordinated group for anti-money laundering standards. And it's similar to if somebody is sending an international wire transfer, then they need to provide originator information and beneficiary information. And so this was proposed to be rolled out, or it was included in the FATF standards that were released in June of 2019. This did get a bit of a controversial reception, partly because that information is often not readily available, or even if it's filled in, is difficult to verify. There were say a lack of technological standards or standardization for implementing it. GDF actually worked with a number of organizations internationally to develop common standards for sort of the message payload itself. Although this has gotten a lot of attention and it's kind of a parallel to something that happens with non-crypto. It has really only been implemented to a limited extent. FATF, and FATF, I think, is quite grumpy about this. They put out, since that June 2019 plenary, they've put out 2 annual reports. And the way FATF standards work is they need to be transposed into individual countries' laws. And they found that in less than half of the reporting jurisdictions, the travel rule had actually been implemented. And so you've actually got sort of a situation where, which people in the industry call the sunrise problem, which is whoever goes first is going to be disadvantaged relative to the other jurisdictions where this isn't. So, I think that you have an element where we don't really know yet what the impact is going to be. Meanwhile, it's widely expected that FATF, when they finalize the next set of guidance in October, November, is going to expand the scope of who the travel rule applies to and how that's there. Again, even before they've implemented the original one. So, I think that there's some question marks around that, and a number of collaborative standards have been raised. The one thing I'll add, and maybe this is a bit of a contrarian view, but I think that a number of things get introduced from time to time that are burdensome, that may go too far, may not be precisely calibrated. An example of that in the U.S. recently was around the infrastructure bill, which defined expectations of $28 billion of reporting. of $28 billion of taxes to come from the crypto industry in the U.S. over the next 10 years, but also had kind of an overbroad and not calibrated definition of what a broker would be. A lot of people in the industry are frustrated about that and work very hard to fix it, and hopefully that will get better calibrated. But it also creates a level of regulatory certainty in the sense that if the U.S. government expects the crypto industry to generate $28 billion in tax revenues, then the government is now in partnership with the crypto industry, and rather than trying to move it to the side or get rid of it. So I do think that with these things like the travel rule, even if they're not as well tailored or calibrated as they could be, to the extent that they provide kind of greater regulatory certainty or confidence for institutions, could they be better? But does it still create regulatory certainty? So I think that there's a bit of a balance in the long run.
Thank you so much. Does anyone have anything else to add on the travel rule? I know it can inspire a range of responses.
Yeah, I can say a couple of things just real quick. Just based on our experience in Cambodia, digital payment systems that are not anonymous, so I don't know, maybe Monero would be anonymous, so that wouldn't count. But things like Bitcoin, Ethereum, CBDCs, these are typically very, very traceable if you try. And it's kind of like using Twitter, right? So it's not really, it doesn't really lend itself to illegal activity or things like tax evasion, unless there's some kind of privacy tech involved. So I would think that regulators would be kind of embracing of the technology. And you don't really need, actually, a lot of these regulations, you can just go out there and do the analysis yourself, and or hire a company to do it. And you can actually usually find what you're looking for without too much effort. So I think a lot of the regulators don't have the technical knowledge, unfortunately, and there's people trying to educate them more. But unless the education level kind of increases, I think we'll just get a lot of inefficient rules that cost a lot but don't actually solve the problems that they want to solve.
Makoto, I think that's an excellent point about compliance being in some ways built into many of these solutions and things being very traceable. But when you think about the onus that's put on individuals to be compliant, it can feel very onerous. And I'm just going to open this one up to whoever might want to answer. But how can digital asset focused companies make compliance easier for users?
Well, I think that generally speaking, in kind of one of the lessons of e-commerce is that trying to make the user experience as kind of as painless as possible. And so I think as a platform or service provider is considering, how to manage these kinds of things, to the extent that they can manage those things themselves and reduce the burden on the user, make it as frictionless as possible for them. Those that have kind of the expertise and resources to deal with the compliance are the ones who are doing it, as opposed to kind of individual consumers who, in most cases, right, have the intention to comply, but may not be steeped in, kind of the intricacies of some of these types of things.
So we are nearing the close of this session, which has been really illuminating, and I'm so grateful for all of your time. But to close things out, I'd love to hear from each of you on this final point, which kind of brings together everything we've been discussing, and that is that technology evolves faster than regulation. And I'm curious what steps companies or organizations can and should take to work more closely and more effectively with governments and regulators to make sure thoughtful compliance is a priority.
I can start. I mean, I would say I do think we're at the point where education is still the most important. So to the extent companies like SDF and others can continue to educate and explain how these different technologies work, and this relates to what I said up front about this is the time for policy and technology to sort of start to combine into a single conversation. So I think that that's the key. And for the private sector, it's to engage with regulators, engage with the people writing these laws, and explain the technology side, and also listen to the policy side as well. And make sure we understand the where regulators are coming from when they think about things like AML and counterterrorism financing. These are important. These rules exist for a reason, and in our industry we need to understand those, and then we also need to explain the technology side.
Maybe to that point, just reinforcing that last point, which is within our organizations, integrating that policy and regulatory perspective from the get-go has proven successful to engaging and working alongside the evolution of those regulatory framework. So education, as Jason just mentioned, very important.
I'm going to jump in and, very strongly agree with Jason and Laurent. The education and engagement is very important. And, there really are, great channels for doing that, whether it's through, organizations like GBBC or GDF, having been, on the other side of this, as a senior official at a regulator, U.S. Commodity Futures Trading Commission, where was responsible for the design and launch of Lab CFTC, which is the CFTC's innovation hub. And most regulators now and government bodies now have these innovation hubs. They have all sorts of different names, but even right to the kind of the BIS, which has launched its innovation hub. But they do consultations, they have roundtables, they have office hours. So there's a lot of opportunity to go in and explain things. And there are, now people at all these organizations who are responsible for finding out about this. And then they've got things designed at the back end of their organization to sort of disseminate and channel the information within the organization. I think it's good to meet, not just with, let's see, that group, but also the, kind of the chairman and commissioners and others. So you're meeting with the staff as well as the leadership of these different organizations to really get the message out. But I think the education is critical and constructive, and you may not always get the results you want, but it's really set up now to deliver that.
I would add that I think I've been pretty surprised at the issues that are dominating the discourse among policymakers in this space. The issues that I really didn't see being so central and that are in some ways beside the point. So just as some examples, the environmental issues have become front and center. things related to ransomware. And so it's, I think, really important to also be able to address issues that are arising, even if they seem like they ought to be beside the point.
I personally think that technology is evolving really fast now, but I don't think it will always evolve as fast as it is. I think there will be some, medium of a plateau, and I think regulation will have more of a chance to take, to catch up and to have better regulation later on. I think that having a dialogue with regulators is really important now, so that there's not kind of jumping the gun on regulation before a lot of the technology is settled. And from my experience talking to many regulators actually in several continents, most of them are very open for dialogue and open to learn more about what's going on and what the trends are. So that's very hopeful for the future.
Absolutely. Well, thank you all so much. It has been a pleasure to listen to your perspectives and to hear a little bit more about the work you're engaged in this space. And we look forward to working with you moving forward. Thank you.